Hello traders, I just want to create a short video and call it thinking outside the box because I think there's a lot of content on YouTube and elsewhere showing you the normal or standard technical analysis concepts. Well, that's all well and good, but to get to the next level you need to think outside of the box. And what do I mean by that? Well, think about this. If you go to a broker website like, I don't know, cmcmarkets.com, and everywhere you'll see that they have, at least in the UK, they tell you what percent of retail investors lose money. In this case, it's 79%. If you look at IG, it's probably a similar figure, 76% in this case. City Index, is 75%, and so on. Okay, so it's obviously unfortunate, but I think a lot of people get into trading without learning how to trade first, and part of the reason for that is that there are not enough or the right type of educational content on the web, or not readily available. So one of my aims is to kind of bridge that gap and teach you guys alternative ways of analyzing the markets, because as you can see, people that rely on normal technical analysis, they don't typically tend to do very well, at least in the early years anyway. So with that in mind, I thought I should make a very quick video and talk about this particular setup, or a couple of setups that showed up recently. So I posted this chart on Twitter on 7th of December, and I showed the weekly chart of gold and silver, and also the weekly chart of the gold-silver ratio, which has been falling and suggesting that silver was getting stronger compared to, or in relation to, gold. And at that time, gold was testing potential resistance around this area, and silver had created a nice bullish engulfing candle. So I issued a trade signal on silver long, which I'll show you in a minute or so. But let me talk about gold first, because last week I shared another chart on Twitter. There you go. It was this one. Okay, so when you see a chart like that, the retail minded analyst or trader would think that this is a head and shoulders top formation, right? So you have the left shoulder here, you have the head here, the right shoulder around here. Price is making lower lows and lower highs on this time frame, which is the hourly chart, and that the neckline is going to break down and the market is going to tank. But if you look at the long-term charts, the trend has been bullish, right? So this is the weekly chart of gold. So what you want to do is you want to go in the direction of the underlying trend in most cases, right? So one of the reasons I thought this is going to be a bear trap is because of that fact that the long-term trend has been bullish and price had bounced from the key support area already, as I showed you here, from this area here. So going back to that, and when I noticed this, and at the time the dollar was weakening across the board, right? So the dollar was falling against the pound, the euro, you name it, against the Aussie, Canadian dollar, everything. So it was highly likely, in my view, that gold would be going up rather than down. And at that time, I thought this was the reversal signal because of the fact that there was a neckline here, and when that broke down, it didn't lead to any to an immediate downside follow through. So that's why I said here that this could be the bottom, and that gold could be going higher from here. But I want to wait for some confirmation for gold to go above this high here, which was the last high prior to the latest move down. So any move above that would kind of invalidate the bearish outlook, right? Because it shouldn't do that. Gold should be making lower lows and lower highs, not higher highs. So if it makes a higher high above this, then at that point you'd have to drop your bearish bias. So with that in mind, I wanted to go long on gold as well, and this is how we traded that. So let me just go to the group. So this was the trade idea, really, and here I have provided some further details showing the Head and Shoulders failure here. And so as part of thinking outside the box, I thought about where would the target be, and the fact that the sellers are getting trapped, you know, you'd have to target areas where their stop loss orders would be resting, and an obvious level would be literally above the high of the Head and Shoulders pattern, and I made a note on it here. So the signal was this hammer candle that was formed after price came back down to this breakout area and this potential support zone, and put a invalidation level below this support level at 1839. And below the low of this thrust candle that led to that breakout, that initial breakout above the most recent high. So that's the reason I put the invalidation level here. But the plan was to move this higher as price made higher highs and higher lows and so on. So once I saw this hammer candle, that's when I posted this to the group. And just to show you the updated chart, this is how it's looking like now. Price came back down one more time to test our entry area before breaking higher, and this morning it rallied above the previous high, thus taking us out of the trade at profit in our first objective, but we do have a open-ended target as well for the second portion of this trade, and for that portion, you know, the idea is to keep pushing the stop loss higher as the market makes higher highs and higher lows, in the event that we may see a spike higher in gold or a big rally in the coming days. So one of the ways to take advantage of that is to have a small portion open in the event that gold keeps going up. And having a small portion open will also allow you to go back in full size on gold or any other market you trade at a later time, and it will still allow you to have a decent average price. So that's another reason why you always want to, or in most cases, you want to leave a small portion out in there in case the market goes significantly in your favor. So that was gold. Another thinking outside the box trade that we made was on the dollar yen. This was the dollar yen trade idea. As you can see, in the day prior, it had formed a nice looking doji candle which looked bullish, but we issued a short signal right after that candle was formed. The reason is because if you look on the left hand side, there are a couple of occasions where price created strong bullish signals that ultimately failed to do what they should have done. So in this case, we had a massive rally off the lows, but there was very little upside follow through, and then price broke down. Then it had one more attempt to break higher, and again it failed to do what it should have done, right? So looking at those candles, I thought, this was another trap, another bull trap. And given that the dollar was already weakening against other currencies, it made sense therefore to look for short setups on the dollar yen. Just thinking outside the box. So the reason I thought it was going to go to this particular level is because this is where trapped traders' stop loss orders would be. This area therefore represents a pool of liquidity for the market to get down to. And this was the entry range. It was literally where price had closed the previous day. And I like the fact that it had gone above the high of the doji candle. But as you can see, it was, at the time I issued the signal, it was going back down below it, suggesting or providing us an early signal that the breakout had already failed. The invalidation level could have been a bit tighter, but I left it there initially, and then as the trade progressed, we moved this down. And just to give you an update on that, if you're wondering, this is how the dollar yen is looking like now. Okay, so this is the hourly chart. Going back to the daily, as you can see, it almost got to our first objective. But what I did is I closed first portion of the trade a little bit early, because at that time I noticed the euro dollar was coming off the highs, and the dollar was getting a little bit of a bid, which meant that there was a possibility that price could form a double bottom here, or a small false breakout reversal signal, which I mentioned in the group. I'll show you in a minute. But I closed it literally right here. So at the time, price had spiked through the low but bounced back, and that worried me a little bit, thinking that it might not get down to the first objective, which as it happened did anyway. But for the sake of 17 pips or so, I couldn't risk keeping the trade open, and for me to see the profits evaporate, especially as we had a couple of other short dollar trades open against the pound, against silver and against gold, etc. So that's why we closed that. But yeah, it's all part of thinking outside the box and looking for alternative ways of trade signals and so on. Just to mention silver as well, because I did talk about it. So after posting this chart on Twitter, I wrote in the group that they are both looking bullish, etc. And I will try to come up with some trade signals on precious metals based on the weekly charts. And I shared the daily then of silver chart showing a possible bottom here, as rates broke above the most recent high, and then when it bounced back from this level on two separate occasions, I thought that this potential support level is going to hold, and we are going to see a potential breakout to the upside. So for that reason, I issued a long trade signal on silver, and this was our entry range. It was based on the fact that the hourly chart had provided this candle for us, bullish candle, and the fact that it had held above that potential support level from the daily. The invalidation level in this case, in case you were wondering, was below these hourly candle lows that led to the breakout. So the objective was at 25.45 as per the daily chart, which is this one. Here you can see that price had found resistance on a couple of occasions. So that was our first objective, but we wanted to keep the second portion of the trade open in case silver continued to go higher and create a new high above its previous 2020 high. So how did it go? Well, silver took its sweet time. When we issued the trade signal, it was trading around here, and price immediately spiked higher after we issued that trade signal. However, it then went into a period of consolidation before coming back down, and at one point it looked like it was going to stop us out, because by then we had moved the invalidation level or the stop loss below the low of this thrust candle that led to that initial move up. Luckily, we survived. Look how close it came to taking us out, and then again here, before it finally broke above this bearish trend line. So when it broke above this, I sent another message to the group saying that if you didn't get on board here, this is your chance now, because price has come back down to that range, and the higher time analysis continues to suggest that price wants to go higher. And then as soon as we issued that second signal, if you like, silver started to push higher, making higher highs and higher lows. So as it made higher highs, I kept raising the invalidation level higher, initially above entry, then here. And then once our target was hit this morning, I moved it further higher to below the most recent low for the remaining portion of the trade that should still be open, because I think silver is going to go a lot higher from here. Now if you look at the daily chart once again, it has broken the bearish trend line as we had expected. The next target is the high that was created here. So trapped sellers will have stops resting above that level. So I think silver is going to take out that liquidity pool next, and then thereafter some potential resistance level to highlight is at this level here at 26.30, which is the low of this hammer candle. Another potential resistance level could be this level here, the point of origin of the breakdown. So around those areas we may see some consolidation or a potential reversal even, who knows. But given how risk assets have been doing in recent times, and the fundamental backdrop for silver, which is strongly bullish in my view, and I'll talk about that some other time, I think silver's going to take out the high that was hit in August at just under 30. So that's why we're keeping a small portion open in case silver keeps going up and up and up from here. So the big turnaround for silver happened when in March price went down, took out stops or liquidity that was resting below these lows on the monthly time frame, and then it spiked back up and eventually broke above its high that was formed prior to that breakdown. Once that gave way, and we made a video on this, it's on the YouTube channel, you will see that I anticipated this breakout before it happened because of the way silver was consolidating ahead of that level. It was around here somewhere. Just to show you, I think it was around here when I posted that video. You know, this tight consolidation and the fact that we had broken above this high made me think that silver was going to take out this high. I had no idea it was going to do what it did. I thought it was going to break above it, but I didn't know how high it would go. And then it broke out. Luckily, we had a trade open in that, and we managed to make a killing in that one. Silver eventually topped out here, and then it went into a period of consolidation. And if you remember from my other videos, I talked about this low here, the August low, a lot. And the reason I talked about that is because, I'll show you why. The reason I talked about the August low is because that was the last kind of green candle on the monthly, after which silver created this red candle. And if you go to my website, you will see that I have repeatedly talked about the August low. I said if and when price goes back above this, that would be strongly bullish, because it would indicate that the sellers looking to go short below this level are going to get trapped. And I didn't want silver to go back down to this level here, because in a strong bullish market, what you want to see is a shallow pullback after a big rally. You want to see a shallow pullback or a relatively shallow pullback and a consolidation ahead of more gains. I wanted silver to hold around the shallow or relatively shallow 38.2% Fibonacci retracement, rather than staging a deep retracement to the 61.8 or so. Because if it went all the way down to this area, and a lot of people were waiting for silver to get to this area because this was the breakout area, right? They want to go long if it got here. Listen, it may still come back down to this area, who knows? But I don't want silver to go down all the way there, because it would indicate to me that the long-term trend is not as bullish as it should be. So if it gets all the way to here, then objectively your target would be this level here, because that's the first area of trouble, right? So so say silver breaks down, comes all the way here, then if you go long here, that would be your objective, because you don't know whether or not this resistance level is going to break or not. In contrast, if it holds here as it is now, and given that it's broken above this bearish trend line, the fact that it's only pulled back to around the 38.2, this strongly suggests that as a minimum, we should get a new high above this. But potentially, using Fibonacci's, it could go a lot higher. So potentially it could go all the way to the 161.8 Fibonacci or even higher over time, because of the fact that after a massive rally, it pulled back to a relatively shallow support area, suggesting that the buyers had remained in control, and that this sell-off was driven mainly by profit taking from those guys rather than people actively looking for short setups. And likewise for gold, I think gold is looking quite bullish now. It has not even retraced to the 38.2% Fibonacci of the upswing that started from August 18. But as it happened, this level has held. 1800 was previously resistance, as you can see on the monthly time frame, and now we're back above it. And just continuing with the theme of thinking outside the box, look at this candle from last month. It looks quite bearish, doesn't it? Well, it does look bearish. It was bearish, but that was last month. This month, the buyers have returned. So where do you think price is going to go to next? Well, I think it's going to go back above the high of that candle, because there's going to be lots of buy stops from sellers resting above that level at 1965. So the fact that it has made a shallow retracement, and the fact that it's holding support, and not to mention the fact that the dollar is weakening across the board, I think it's highly likely that gold is going to go to this area and possibly climb to a new record high. I could be completely wrong, guys, okay? I could be completely wrong, but that's how it looks like to me at the moment. And, zooming into the daily chart of gold, we have broken back above these lows here. So this was the October low. This was the September low, or was it this one? Doesn't matter. September, and that was the August low. All of these levels should have provided resistance, but we've created a higher high above this level here, which was the most recent up move before that big breakdown that happened. So the fact that we've moved above that, and we've broken this bearish trend line, and not to mention this key area, reclaiming this key area, I think all of that point to a continuation to the upside. So yeah, I said I'm going to be very brief in this video. I mainly wanted to highlight how to think outside the box and to provide my views on gold and silver briefly. But the video is no longer brief, so if you've stayed with me, thank you so much for listening. And don't forget to like and share the video if you found it useful. This will encourage me to keep producing these kind of content. So thank you so much for listening. I will speak to you guys soon. Take care.